Hello all. Today we're going to start off on a new question. It's one of the question ones, and it's the company accounts including a manufacturing account. So similar to the company account we already did, except an extra bit onto it, a manufacturing account. Now, since there is an extra little bit onto it, of course, the trading profit and loss and balance sheet part of it will be a little less onerous, not as difficult to allow for the fact that you have to do a whole extra part. Now, you can see it's laid out much the same way. Oh, and I should say from the very beginning, and I'll say this in the post in a moment, that it's going to be the 2005 higher level question that we'll be looking at first. Okay, so you can see it's laid out the same way anyway. It's got a trial balance with much the same information as you would have in the other questions we attempted, some additional information, and then at the very end it asks you to prepare just an extra little bit manufacturing trading profit and loss account. It says as though that's one thing, even though really what we do is we prepare a manufacturing account, and then we prepare a trading profit and loss account, and then we prepare a balance sheet. So it's as though you have three accounts really. Yeah. Okay, so let's get started straight away. And getting started with the manufacturing account, the heading that we give it is just like a trading profit and loss account, except we call it manufacturing account. So manufacturing account of James Limited for the year ended 31st of the 12th, 04. Now, this is going to have two columns in case you're writing along as we go through it. And also what I would say is, just to give you an idea of what it's going to be like, the manufacturing account here is very, very similar to the manufacturing or production cost account that you have done already in the production budget questions. So the real difference between the two is that this manufacturing account is in financial accounting. So all of the figures that you're putting in here are figures that have already occurred, expenses that occurred for the year. Whereas in the production budget question, they're all forecasted costs. But ultimately, we're looking at the same thing really. In the production budget one, you're looking at what you're guessing the total cost of production or manufacturing will be for the year. In this one, you're calculating what the total cost of production or manufacturing was for the year because you have the actual figures. So, let's get started straight away then. I suppose there's one other little thing maybe that didn't come up in the production cost ones to mention, and that is that you have three different types of stocks in this question. So let's see if I can see it in the question here. Oh yeah. So three different types of opening and three different types of closing stock. So the three different types are finished goods. Because you're a manufacturer, you have raw materials which you use to create these finished goods. But then also you have work in progress. So some goods that you were manufacturing and that you're halfway through creating when the year ended. So you have these work in progress, we call them. So they're sometimes they're known as work in process as well in other texts, but they're basically items that are not quite finished yet. They have a bit more work to do on them before they become finished goods. Okay, so for opening stock you have those three types, and same three types then for closing stock: finished goods, raw materials, and work in progress. Okay, so let's get started. First of all, 1 second now, I just have to... There we go. First of all, because this is a manufacturing cost, really, total manufacturing cost document here, the first big cost of manufacturing is going to be your materials and your raw materials in particular. So when we're doing this materials part of it, really it's very similar to the cost of goods sold part in a trading profit and loss account. So we start with the opening stock of raw materials. I'm just trying to get this right as a... Okay, so opening stock. Raw materials. Now you can enter the opening stock either in the first column or the second column. It doesn't matter. You'll see it in different ways with the different solutions, I suppose, from the Department of Education, but either one is fine. I'm going to put it in the second column over here. So the opening stock, we always get our opening stock of whatever it is that we're getting from the trial balance. So it's raw materials we're talking about. The middle one here, 48,000 is our figure here. So over here 48,000. Okay, now remember I said just like in a cost of goods sold, we have opening stock plus purchases. Except in this case, we're not trying to find the cost of goods sold. We're trying to find the cost of raw materials used in the manufacturing process. So purchases, maybe some work to be done here. Let's see where our purchases are. Purchase of raw materials, 450 to 80. Okay, so I'm going to do the work in here, the workings. 450 to 80. 280. Okay, and if we have a look down through the additional information to see if there's anything here about the purchases of raw materials, and you'll see something that has come up before in our company accounts. It was, no it wasn't. Number 5, during 2004, James Limited built an extension to the factory. The work was carried out by the company's own employees. The cost of their labour was 40,000 and that was included in factory wages. And the cost of the materials that they used, 18,000, is included in purchases. So it means that if they were included in your purchases figure, but they weren't used as purchases to manufacture goods for resale, then they shouldn't have been included in the purchases figure. They were used, those stocks of raw materials were used to create an extension or to build an extension to the factory. So it shouldn't have been included. So we're going to subtract that. Minus 18,000, I think it was. And what's that? 432 to 80, I suppose. 280. Okay. And then ordinarily we would just add the two of these together and subtract closing stock and we'd be well on our way. However, there's one extra thing in this question. Comes up a lot of times, not necessarily every time, but a lot of times. So with the cost of the materials, an added cost that you may have is the cost of delivering the raw materials to you. And, you know, our fancy word in accounting or in business for delivery is carriage, isn't it? So carriage on raw materials, we can see here is 5510. And that's an added cost, I suppose, onto the cost of the stock. Or the raw materials, stock of raw materials that you used in the manufacturing process. So we've got to include that or add that on also. And we can see, look, it's on the debit side here, so it's an expense, isn't it? So we'll write it in as carriage in. Or really, I mean, if you just wrote it down as carriage, that would be fine as well, because I know we get kind of mixed up with this carriage in and carriage out terminology sometimes. You know, it was transporting the goods into our factory, that's why it's carriage in, but it really isn't important to include that word in when we're doing the question, so you can leave it out altogether, as long as you recognize it was on the debit side and it was an expense, as you know, it's always going to be. 510. Okay. So we're going to add those all together and then subtract our closing stock. So let's see. So if I haven't made any mistakes, 485790. And our next thing then is less closing stock. Okay. And our closing stock then is going to be found in the usual place. And again, because we're talking all about raw materials here, it's the 51,000 here, not the finished goods or the work in progress. So 51,000. Oh, it's very difficult to write here while I'm looking at myself in a screen doing it. Okay, so we're subtracting. And we're going to get, what, 34,790, isn't it? So 434,790. So that's the first part. Now, I've never seen anyone penalised for leaving it out, but you should. I mean, best practice is to put this in every time. That is the cost of raw materials consumed. So I guess it makes sense. It's kind of like the cost of goods sold. So before you take off the closing stock, that's the cost of your raw materials, isn't it? But you only want to know the cost of the ones that you consumed, that you used this year. So you subtract the ones that were left over that you have in closing stock. So that's the cost of the materials you used or you consumed this year. Okay, next thing then, we have a heading called direct costs, and that's pretty much the same as variable costs that we have in the in our production budget questions. So our direct costs tend to be the same in this question all of the time, but we'll talk in a second about what they are, I suppose more specifically about what they are or what they can be in a moment. So we have direct factory wages we see here, direct factory wages 198,220. Now there is going to be a an adjustment there. Factory wages, we said 198,220, and the adjustment is the one that we've seen already or that we described already. They built an extension. The work was carried out by companies' own employees and the cost of their labour was included in factories' wages. But since it wasn't really a cost that's associated with the manufacturing process, it was a cost associated with getting this extension, this fixed asset for the company, then it shouldn't have been included in the factory wages. So we're going to subtract that 40,000 again. And we're going to put that in the first column. Okay, so the next one, and again, this, like these two always come up really, the factory wages, and the other one is hire of special equipment. It comes up all of the time. Hire of special equipment, 12,000. Okay, just going to put in the figure first. Okay, 12,000. But I suppose any kind of direct cost associated with the manufacturing process could go in here. Now, there's only really one other one that I've seen come up in a Leaving Cert question, and that one is, and you might make note of this somewhere if you're writing this out, and that's royalty payments. So we consider royalty payments a direct cost because they vary directly with how much you manufacture, because a royalty payment is normally a payment to somebody else, another company, for some idea of theirs or some technology of theirs that you're using. And normally you don't just pay like a lump sum and then you can use it as much as you want. You get charged based on how many products you use using their manufacturing process or using their idea. So it's a completely variable cost or a completely direct cost. So that royalty payment normally would go in here as well, if there were such a thing. But in this question, there's no royalty payment. Okay, so totting that up then, that's let's see, 172.20. Okay, where are we? 220. Okay, now what you could do as well, I guess, look, I'll put it underneath here as well, because just for best practice to show you, 170, 220. The total of direct costs is what we call prime costs as well. So we should really put that in there. It's the direct cost and this, but you don't need to add that in. And really, I mean, you'll be in a hurry when you're doing this question, so maybe we'll just leave it out here for now as well. So our next thing then is your factory overheads. Okay, so our factory overheads are, again, any costs which are not direct costs, but which are associated with the manufacturing process. And they tend to be the same every year as well, with one or two maybe that you see sometimes and don't see other times. But for the most part, they're the same. So you have these, where are they? They're usually general factory overheads. Let's check to this. General factory, here they are. General factory overheads, 50,300. I'm just going to put in the figure first. general factory overheads. Next one then for this question is going to be, and maybe I'll just write down the figures first because there's going to be some workings to do, but depreciation on machinery. And depreciation of buildings. Oh, depreciation of buildings. Okay, and the next one that's going to go in here, but it doesn't necessarily go in here every time, is there is going to be a loss on sale of machines. Since the machine is used for the manufacturing process, or the machines generally are used for the manufacturing process, then if there's a profit or loss on them, then it goes into the manufacturing account. So in this question, just because I know already, I've seen the solution, there's a loss on the sale. But if it had been a profit on the sale of the machine, then would have to go in sort of like a gain in a trading profit and loss account. But it would actually go in as a minus in this, because you'll see what we're doing is we're adding up all the costs of materials, direct costs, factory overhead costs. So at the end we have the total cost of production. So if you made a profit or a gain during the manufacturing process, it would actually go down as a minus in here to offset or to lower your cost, your total cost of production a bit. So really your gains go in as minuses here, whereas your expenses go in as pluses in this manufacturing account, because ultimately you want to find out what your total cost is of manufacturing. Now when I say your gains, there are only two that ever go in here, and as I say, one of them doesn't always go in. If it's a profit, I think I've only seen a profit come up once. It's generally speaking a loss on the sale. The other thing we'll see in a moment that comes up pretty much every single time. Now I'm going to pause that there and make a second video with the rest of this.